of this is that with both oil drilling and mineral rights acreage, you can, if you so desire, 1031 into it or 1031 out of it, because it's considered real estate. Okay, because it's land.
All right, guys, it's your boy Mike from Seattle, and right now what I'm going to talk about with my mentor Mark. Mark, say hey.
Hey, Mike, how you doing?
Doing good. What I want to talk about in this video, Mark has about 25 rentals in Indiana, same market as me, and he has since retired and is now living down in Florida off of a lot of this rental income. But since becoming an accredited investor, and I'll let him explain what that is, since becoming an accredited investor, he has now diversified into mineral acreage rights and oil drilling. So Mark, if you could walk us through accredited investing and then why you started to diversify.
Sure. Basically, with being an accredited investor, there's a definition. I think there's 5 or 6 different ways to be accredited, but there's 2 main ways that the majority of folks will become accredited. One is to have a high income of at least $200,000 if you're single annually, or $300,000 if you're married, for 2 consecutive years, with the expectations that it will continue, that high income. The more common way is for someone to get a net worth of at least $1 million. That's not counting your personal residence. So to have a net worth, all the stocks you own, all the assets, minus your debts of at least $1 million, then you become accredited.
Gotcha. So, I mean, obviously for you, since you're retired, your income isn't at that $200,000 or $300,000 mark because you're married, but your net worth, what you have with 25 rental properties, and I guess your personal residence doesn't count, but 25 rental properties, that's probably what's got you up there. And then I assume you still have some money in stocks and things like that.
That's correct. It's primarily the real estate. Back when I was as a stock investor, and I've said this on my channel previously, if you don't have a lot of money, you can have great stock returns, but it takes a long time for your returns to really build up. Okay. When I started with real estate, I found that real estate can ramp up much quicker than stocks can. Even though you may have a stock that goes up 2,000%, as a whole, real estate will ramp up quicker. The numbers are bigger. All right, so that's what happened to me. When I started buying real estate, my net worth, which was several $100,000, just took off and went up to $1 million and is still climbing. Okay.
So okay, so you become accredited, net worth's going up because of real estate. As you become accredited, I know in the past when I chatted with you and we talked in our group chat, we've always kicked around the idea, and you've asked the question, how many rentals do you guys want to get to? You ask me, you ask Caleb, the helicopter pilot, how many rentals do you want? Where do you see yourself? What's your plan? You're always making sure that we're thinking about those things long term. But then you decided to diversify into mineral rights acreage and oil drilling. How did you hear about these? How did you get introduced to this concept, and why did you choose to go down that avenue?
Sure. What happened was I'd always had a Roth IRA and a traditional IRA. More recently, I found out about what's called a self-directed IRA. Okay, so I opened up a self-directed IRA with Quest. That's my custodian, called Quest. With Quest, like a lot of custodians, they will offer free webinars, free YouTube videos. And during one of them, they had, I think it was QuestCon, they had a variety of experts talk on a variety of topics of alternative investments that someone can invest in inside of their self-directed IRA. And when I watched these videos, a couple of them interested me. Some of them didn't, some did. One of them that did was mineral rights acreage, and that was with Troy Eckert Land and Acquisition. So I watched the videos, I found their website, I started researching, like, what is mineral rights acreage? And you know what that is, and a lot of people know what it is even if you don't realize it. If you buy a piece of land, normally you own the land, what's under the land, and what's up in the air to a certain height above the land. Mm-hmm. Okay, with mineral rights acreage, it's acreage somewhere where there is oil, natural gas, liquid natural gas, or water, or something else under the ground, and it is possible to buy the rights to that acreage under the ground. So when I started reading about it, watching the videos, listening to Troy talk, I realized like, as a way to diversify from real estate a bit and diversify from stocks, I'm going to put a little bit of money into mineral rights acreage. So I put a little bit in there. But then anytime I invest in something, I keep studying it. The more I studied it, I realized this seems like a pretty good deal. It seems like it's the right time. There's certain times in life, certain technologies take off, certain things take off. And oil and natural gas have been here for 100 years, roughly. But we're at a time with the pandemic, drilling stopped. The market got flooded with oil. You may remember back in, right prior to the pandemic, Saudi Arabia and Russia, I think, flooded our market, trying to drive U.S. oil drillers out of business. So the amount of rigs dropped. Drilling for oil is expensive. A single rig might cost $5 to $10 million for one rig. It's expensive. Wow. So when the market stopped and then the pandemic, people stayed home, there was less demand for oil. And so as the economy's picking back up, the amount of oil drilling rigs out there aren't coming back that fast. There were 900 some rigs that dropped to 200 some, and right now we're at 400. As we drive more and as this winter cold weather comes, the price of gas is already going up. The price of natural gas is going up. The expectations are it's supply and demand. We do not have the supply, the price will go up. But as an investor, that's kind of the best time to invest in that field.
Right.
Okay. So with mineral rights, I found out what mineral rights acreage was. I was happy investing in them. And one day I had a phone call with a guy at Quest. And as a custodian, they are not allowed to recommend investments to us investors. They can provide us with information, but they can't recommend. So this person I talked with said, hey, by the way, we used to have someone talk on our channel, but here of late we haven't done it. But if you contact him, he might send you a free book. And I contacted the office and they sent me an autographed copy of his book. And when I read the book, I'm going to hold it up here. All right. If you can see that, it's The Upside of Oil and Gas Investing by J.R. Young. Okay. So when I read this book, it's not a thick book, but when I read it, Jay talks about how the traditional way of drilling for oil, it was like all or nothing. You might raise, as an investor, you might raise that $5 or $10 million to drill one hole straight down. But if you didn't hit oil, it was a bust. All of your investors lost their money. It was a bust. Now you have modern technologies. They drill down 2 miles. They drill horizontal 2 miles. Down and horizontal, okay? And they're not drilling one well. They drill multiple wells down, multiple lines over. And as the line goes horizontal, if you can see, I'm not sure what they call them, but they have pipes that go up every 50 feet or so to better tap into the resources down there. So the point of them doing that is they can recover more of that oil or that natural gas now than they ever could before. So the risk, there's always risk with investing. But the risk with oil drilling, that whole drill and hit dirt is pretty much gone. If you do it this way, there's always risk, but it's much safer. And what Jay is doing, he's buying huge tracts of land, 10,000 acres, 12,000 acres, and setting up multiple places to drill. Okay. So the more I learned about this, the more I watched his YouTube channel. I've texted him, I've talked to him. The more I realize and Troy will say the same thing, we're kind of at a perfect storm right now with energy. You have that strong, you have the numbers are down for the supply. You have a big push going on for the green movement, like a big push for that. And that big push is talking about oil and gas being evil, kind of like they're the bad guys. Let's stop drilling and stop this. But we can't stop because you've heard me say, I'm an environmentalist. I like nature. I like trees. I would love for everybody to go solar. I would love to have an electric car. But we as a society need oil probably for several more decades. Every piece of plastic, every piece of rubber tire, the roads, they all have oil in them. So as an investment, if the supply is down, there's a negative sentiment towards that, but there's a demand. We need that. Like this winter, as the weather gets cold, a lot of people heat with natural gas. If the price goes up, they have to pay that bill. They need that heat. So as an investor in that field, it's the perfect storm. The potential for the best returns seem to be there.
So perfect storm, obviously oil is something that we've been using for a long time. We're probably going to continue to need to use for a while, despite Elon Musk's best effort. And I do agree with you that I think we'll probably get onto electric at some point, and I hope to own a Tesla. I know you do too at some point. But so what type of returns? How are you paid via oil investing? I mean, you send them money, they spend it where? Is it in purchasing the equipment and buying the land, a little bit of everything? And then how do you get paid?
Sure. There's two different investments, mineral rights and oil drilling. Mineral rights, you actually buy the acreage. I have deeds. It's recorded in a courthouse. I own the rights to certain acreage. I don't own the land. I own the rights under it. So as long as whoever the oil company is, it could be Exxon, it could be whatever they are, whoever is drilling, as long as they do the drilling and find something, I will get monthly revenue checks. And the acreage we're buying is in known oil reserves. It's in good spots. The oil drilling is different because when you invest in the oil drilling company, you're paying for everything. You're paying to get that rig set up. You're paying to buy that land. You're paying for them to survey it, to get their geologists out there, their engineers. You're paying for everything. With the mineral rights acreage, you're not paying for anything. You just own the rights. So if they tap in and they get natural gas and they get oil, they owe you a certain percentage back, and you will get that monthly return. Okay. The mineral rights acreage, he will say expected returns could be 10% to 20% to 30%, somewhere in that range. Okay. I'm starting to see it because with all of this, if you buy a rental property, you start getting rent pretty quick. If you buy stocks, every single day that market fluctuates. It goes up, it goes down. When you buy an alternative investment, it could be a syndication with an apartment building. You invest money, it takes time to get the whole process going to get the returns back. Right. And when they start back, they're slow, but then they start getting bigger. With the oil drilling, as much as I like mineral rights, because if I can get 20 to 30% and I'm not doing anything, that's pretty nice. That's a good return. I don't have to deal with a rental property, no tenants, no property manager, no stress, just get the checks in. With the oil drilling, they're calling it the perfect storm, and they're thinking their returns, they have 5 locations in something like 4 or 5 different states. And every location is a viable oil, natural gas location. And Jay learned his technique of what he's doing from a real estate investor. He has a buddy who buys an apartment complex. The buddy told him he buys rundown apartment buildings. He buys them, fixes them up, and either sells them for a lot more or does a cashback refinance, pays off his investors, and goes on. So Jay's plan is to get one section that he has, get the drills in place, get the drilling going, get the monthly revenue checks. And the monthly revenue checks, you see me post every month in 4 months, it's gone up. It started small, like 3.8%, 3.9%, 4.9%, 5.6%, and now it's 6.7, whatever it is. Every month's been going up. But with what he's thinking, that return is going to keep going up to 15, to 20, to 25, to 30-ish, somewhere up there. And then at the end of 2022, roughly, they plan to sell that first section. And their plan is to return all of the money to their investors, whatever the amount they invested, plus more. And they're expecting a 4x return. So if you invested $50,000, you get $200,000 back, roughly. Okay, so whatever your investment is, it's a 4x return. So you get all your money back plus more. And then they have their 4 other remaining sections, which they will then drill, build up, get them going, and sell that again. If none of the other sections played out, we still get that, hopefully that 4x return. If they all play out, that's where within a 5-year period, we may get a 20 to 25x return.
Dang.
And we've already gotten our first money back. So it's kind of like we're playing with house money, if that makes sense.
Yeah. No, I understand the reference. You already made back the money you put in. So everything else now, you may as well invest it because you're playing with the house's money and you might strike big.
Right, correct. And the beauty of this is that with both oil drilling and mineral rights acreage, you can, if you so desire, 1031 into it or 1031 out of it because it's considered real estate. Okay, because it's land.
That's very interesting.
It is. So if I make a big return from the oil and I don't want to just put it in my pocket, if I put it in my pocket, I got to pay capital gains tax.
Right.
And that could be a healthy tax. But if I roll it maybe into a 20-unit apartment building or whatever it may be, I could roll it into real estate, or I could just roll it right back into the oil company.
Right. Yeah, that's an interesting strategy. I've heard you talk about it many times. I have not heard you talk about the fact that you can 1031 in or out of it. That makes it, because you're right. You're technically buying land, which is real estate. Well, cool. So, yeah, I mean, I wanted to have this perspective from you because obviously I do real estate. My channel is real estate focused. I have talked about stocks before when it comes to like my Roth IRA. But looking down the road for me, looking down, if I can be as successful as you were as quickly, I could end up being at this, divergence in the roads sooner than I think. And it's definitely something I'm interested in doing what I did with real estate, which is copy and pasting your strategies into my life for success. Mark, before we finish up, what is your favorite financial book of all time? What would you recommend people, the one book they should read?
The one book I pulled 2 books out. I showed you my oil book. That's not my favorite. 2 books that changed my life the most. One is Long Distance Real Estate Investing by David Green. That's what opened my eyes up to investing outside of my area. Okay. The other book is a book by Chad Carson, which Retire Early with Real Estate. And when I read this one, because he's focused on how to retire early with real estate. And he has, at the end of each chapter, he has an individual who has retired early, and he interviews them and gets their thoughts. So, and as you reference, I have a bookshelf behind me. I could pull out 10 more books that I like almost as much as those books, but I'm not going to pull all 10 out. So.
Well, that's a big compliment for Chad right there. I know that you introduced me to his YouTube channel. He's got some really good information, and I follow him on Instagram as well. Mark, if people want to get in contact with you, obviously your YouTube channel, Mazske Finance, the link for the description below, but any way people can get a hold of you?
Sure. If they go to my YouTube channel, not in every video, but in some of the videos, look in the description and you will find my email address, just mazkefinance@gmail.com.
Perfect. Mark, I appreciate you coming on, and I look forward to having you back. Thanks for being here.